What's going on YouTube? It's your boy Chike Investing. We are here today with another video. We're going to be talking about how do you combine smart money concepts with ICT concepts. Alright, I'm going to be going over an example specifically on GBP USD, and we're going to be going a complete rundown on the chart. What is my live analysis of this particular currency pair today, and how am I combining ICT concepts with smart money. And also, I'm going to go ahead and give you guys a long-term analysis that you can add onto your own charts based off what I'm doing here. All right. Before we get into today and today's lesson, I'd like to remind you guys that if you like the video, then like the video. You know, I don't understand why you don't like the video if you actually ended up liking it. So just like the video. You know, it also helps me grow my channel, helps my channel to evolve like we plan to do in 2021. Another thing I'd like to ask you, please, don't call me Chike. Call me Chike Investing. Let's get into it. Okay, so we're going to start it off on the weekly part of the GBP USD. And a quick reminder again, I'm going to be going over how I'm combining smart money concepts and ICT in my particular analysis of GBP USD. All right, let's get into it, man. Essentially, I like to look at higher time frames first and then get into lower time frames. For all the people who've been following my channel, you guys know this already. You know, you can go ahead and skip over this part because I talk about it all the time. But essentially, you need to look at higher time frames first because they trump lower time frames. Lower time frames are just simply a shorter version of what's happening in the long run. And so you have to make sure that you're considering what you're doing in the long run, or what's happening in the currency pair in the long run. All right, and so I like to start off with the weekly, then I like to peruse the daily 4 hour, jump to the 1 hour. After that, probably go straight to the 5 minute. Not everything else there is very important to me. Okay, so on the weekly, we have this long, massive trend line. This has been happening over the past 5 years, right? And we recently got a breakout, I believe, around the end of 2020. Okay, so this trend line spans all the way down here. And we got a breakout in the dollar, and the dollar started to weaken, okay, across many other pairs. And this is primarily due to the onset of the pandemic and America's poor, political handle of the pandemic. However, we are seeing some more dollar strength nowadays, given that we, here in the United States, have been having a very successful vaccine rollout. By the way, I just got my first Pfizer dose, so super happy about that. But essentially, we are still seeing an overall weaker dollar, all right? Especially compared to the British pound, all right? We're seeing GBP USD appreciating, and this is primarily, like I said, onset by the pandemic. It reversed the past 5 years of dollar strength, right? And so how you can confirm this on a technical standpoint as well is you can look at this trend line, and how it breaks out of this trend line, comes back down, bounces off this other trend line, and starts heading back up solidly. That's how you know we are ready for a full-scale reversal of direction. Because when you've broken past, this is what we call break of market structure here. When you've broken past this market structure trend line, but it comes back and keeps going again, that is a strong enough. I honestly can't explain that to you very well. I really don't. I'm not an expert on why this is. But I personally noticed and have been taught from my mentors that when you see a move like this, move past the trend line, but come back down and bounce off again, that's how you know you're really going to move in the opposite direction. Otherwise, it can just look like a manipulation of, buy orders. All right. And so we're heading up now. It's pretty obvious that GBP USD is bullish. Our long-term time frame is bullish. Look at the pools. Look at the pools of liquidity that were up here, right? This is going to act as a magnet, right? This is going to act as a magnet for the currency pair when it was at this time, and you can see that it came out and took out this liquidity here. Another thing that you can also see in the long-term time frame, and these are smart money concepts I'm combining now, right? I'm introducing smart money concepts. These are liquidity pools above here across these 2 equal highs, and liquidity pools across these 4 equal lows. 1, 2, 3, 4, and a couple other that are just in the perimeter, right? All that was taken out by this large sell action. That wasn't you and I. That was banks. That's institutional banks. You can't explain this without there being somebody out there who has billions of dollars, and only banks have billions of dollars to throw into currency pairs. All right, or you can call it, nations as well, but nations do these through banks. And so at the end of the day, it's all about banks, institutional banks, right? Capturing this liquidity here to go to the buy side. There's a magnet up here towards the buy side. There's a magnet up here, these equal highs right here towards liquidity. There's even another high up here, right? And so we can obviously see against the backdrop of the pandemic onsetting this, combined with what's happening on the technical chart, weekly time frame is very evident that we are going upwards. Okay, and so you want to be looking now in the short-term time frame for opportunities mainly that are in that same direction. However, if you have a strong analysis that can showcase that it might be having a short-term reversal downwards and you want to catch a quick stop on that, go ahead. But that's going to be riskier. The safest way to trade is generally in the long-term direction. All right, let's scope out the daily. Nothing too phenomenal happening here. So we're just gonna go ahead and skip all the action between here. Nothing's really relevant anymore. We're gonna come here and highlight this box and focus on what's happening here in recent times, right? And so if you look at this last wick right here, this is more smart money now. We actually came, if you go back to the weekly, into a weekly institutional candle that actually mitigated this candle that took out this liquidity over here, right? This candle took out this liquidity. This candle came to mitigate it, but it also swiped a little bit of liquidity as well. If you zoom in and you look at this candle, you can see that this institutional order block took out this high, and all of these highs as well, right? Capturing buy orders, buy stops, and allowing the banks to sell off because they've now captured that liquidity. There's two sides of the market, right? You have the buys and you have the sells. Makes sense? All right. And so when someone's gonna buy, what I mean by that when someone's gonna buy, right, someone has to sell it to them, right? And so the banks are doing all the selling off while they're catching the people who just bought. All right. Okay. And so we can see that it came into that candle right here. This wick came to this candle to mitigate this, to break even here on the institutional orders that were placed here. And so that would explain why we got this short-term pullback. However, that doesn't necessarily mean that we need to continue to go in that direction. If we're really thinking about going downwards, what I'd like to see is a move like this. We break here, pull back up a little bit. It's so ugly. Sorry, I'm not an artist. We break down here. We gotta pull back up. That's what we call the break of market structure. You break it and then it comes back up a little bit before shooting down again, right? That's what I would like to see for us to know that we're really going in the short term. In the long term, we're going towards down, or we're going bearish. That's not necessarily, a confirmation as of yet. And so we now have this. Oh, sorry about that. We now have this box to consider. All right, and what's happening in here? So let's scope what's going on in here. So we haven't gotten enough action to come down. It's looking like it's teetering a little bit, and so we still got buys in place. It's still going upwards. We still got buys in place. I would keep my eye on the buy. Go down to the 4 hour. Something very interesting here. So if you actually look here, let's draw this. Look at this imbalance. That has to be filled. From this last wick down to this wick, this whole blue space is all sell orders. We need buy orders to come and fill these sell orders here, all right? And so we can see that this is going to act as a magnet, pulling up the currency pair further upwards. And that is also in confluence, like I talked about in my last video, with what's happening in the long-term time frame. Another thing to scope out, pause the video, see if you can find anything else, right? And when you're done, I'm going to tell you what it is. If you look at the 4 hour, come closer. Look at this swipe of liquidity here. 1, 2, 3, 4, 5. All these wicks creates a floor of support, right? That was blown through by this institutional candle, 4 hour. And you can see that we teetered up a little bit, but came back to mitigate this 4 hour. So you could have had an open, you could have placed, there could have been a trade where you had a buy limit here to get into this trade. But even if you can't get into that one, right? We just know that now we're going in a long, like we're going towards a longer time. I mean, in this medium time frame, we're continuing to get more confluences going upwards, right? So here, that's more smart money concepts so far. We haven't really talked a lot about, any ICT concepts, but we're gonna get into that shortly. And so you can see that the sell-off action, right, that took out this pool of liquidity started really from this big bearish candle that started going down. And so that came back, right? And let's put a long position here. Put it below this low. We can even aim what? There's imbalance to get filled, right? Beautiful play. Super simple, super easy. That's simple. If you didn't catch that, here's where we can get ICT, right? You take your Fibonacci from this level. You can, well, actually, let's not jump to ICT yet. Let's highlight another smart money move. You can see all this liquidity. Look at all of it here. Look at all these wicks. 1, 2, 3, 4, 5, 6, 7, all blown out by this bearish action right here, right? And then followed by a massive buy. That's only institutional play, right? They captured all these sell stuff so that they can buy. And look at how big this buy move is. It's clear as day. And so you can either play it smart money, right, and get in at the open of this bearish action, right? That needs to get mitigated. Or you can also apply ICT concepts. Use this OTE Fibonacci formula. Drag from bottom to top. And you can see that this 62 level matches very well with the open of this bearish action. And so there's no problem in setting another buy order at that 62 level, right? Open here, stop loss about 40 pips, something like that, and you're still aiming for the same direction towards that imbalance, right? Easy 1 to 4 play, 1 to 5 action. All right. And so it's that simple. It's really that simple, guys. It's not that much to it. You can even go back into the 5 minute. I like to showcase you guys something else. I think something that's very important, and I'll actually do a video on it, is looking at shapes as well. Looking at shapes. And if we zoom out here, you can see that this kind of looks like a heads and shoulders. Right? This kind of looks like a heads and shoulders. You got this. Right? And so you see how this heads and shoulders now presents another confluence that we are going upwards. We're going upwards on GBP USD. That's what's gonna happen, right? All the cards are showing upwards. Very minimal are showing bearish, okay? So you have that smart money combining with this shape. And because that shape was there, you can actually have also drawn from this low to this high. And you see let's erase all this. This gets too confusing. Right, and you can see that from this low to that high on the 5 minute, right? From this low to that high within the heads and shoulders, right? Let me draw that heads and shoulders again so you guys understand. Okay. Within this heads and shoulders, you see that it's about to create another shoulder right here. And so you draw from this low to this high, the heads and shoulders. You can see that 62 level, it lines up pretty well with that 4-hour order block that we had. It lines up pretty well. All right. And so these are just several ways to combine OTE concepts with smart money. You see how this OTE Fibonacci lines up very well with the smart money 4-hour order block. When you combine smart money and ICT concepts together, you get a very formidable trading strategy. Thank you guys for listening today. I hope you guys learned something. Like I said before, creating a strategy that combines both smart money and OTE and ICT concepts all together with shapes, combining all these strategies together, mainly smart money and ICT together, is going to create a formidable strategy. Thank you guys for being here today on my channel. Make sure to like and subscribe, and please share the videos with others if you think it's going to help them in their trading process. All right, peace out and have a good week.